Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, markets look set for a positive start, tracking the positive global handover, at least when it comes to the SGX Nifty trends. The trends indicate a positive start. Asian shares, however, they're skittish as banks face default stress. If you talk about the US stock futures, of course, they've been up on SVB reports, and of course there have been hopes that authorities were working to ring-fence stress in the global banking system. The report suggests that First Citizen Bank shares is in advanced talks to acquire Silicon Valley Bank from the Federal Deposit Insurance Corporation. In terms of the FIIs, they've gone back to their selling streaks. FII have sold in shares to an extent of around 1,720 odd crore. In terms of DIIs, they've bought in shares to an extent of around 2,555 crore. But with that, let us get going and discuss some stocks and strategies with Prashant Sawant, who is the co-founder of Catalyst Wealth. Good morning there.
Very good morning, Nick.
All right, let's start off by talking about the STT, which is coming on the, the option trading. Do you think that's more like a syntax? People will not stop trading in because of the taxation. How do you look at it, and how do you think markets can now, the participants can use that, strategy accordingly? Do you think there'll be a fall off in the volumes for this segment at all?
So, Nickey, I would like to compare it to the prices of the fuel hikes, the diesel and petrol. Why? Because it has become so common now on the option selling front. So I think there would be an impact in the short term, but going forward, I think it would be balanced and the impact would be negated. Yes, there would be a knee-jerk impact for the next 2-3 days, but I think it would be more balanced. But the more important criteria I'm looking at is the option which they have removed, which is do not exercise. So from that perspective, I would definitely like to advise, especially the option buyers and the sellers as well, that before expiry and in the stock options, it is mandatory that we square off all the in-the-money options. So the best way would be on the last day of expiry, avoid in-the-money options of that month and try to go to the next month options.
All right. Also, Prashant, what do you make out of this entire weekly expiry change that has come through for the mid-cap segment? Before we deep dive into what do you think the levels would be next for Nifty and Bank Nifty?
So I think, Nickey, if we just go back 2017-18, that's where Bank Nifty started becoming more liquid. Previously, it was only Nifty. And the same way, the next one which caught everyone's eye was Fin Nifty, that is Financial Nifty, which expires on Tuesday. And now they have come up with a mid-cap Nifty expiry on Wednesday. But I think for at least the next few weeks, that is initial 7-8 weeks, there would not be much of a liquidity. And from that perspective, I would definitely advise against option buying in that area, because when it's not liquid, it becomes very difficult to trade in options, which we also found when Fin Nifty expiry was launched initially. Once it settles down, say around 7-8 weeks down the line, I think then you can look at Fin Nifty. I feel it's a more balanced index mid-cap Nifty. I think mid-cap Nifty is a more balanced index as compared to Fin Nifty, and it would be a better to trade. But let a few weeks, around 7-8 weeks pass, and then we can take a call.
Prashant, for the Nifty, the recent swing high of 17,207, could that be now considered as a newer lower top of the sequence, and the market, you think from here on, will be on the way down to a newer low bottom?
So I think, Nickey, just to give you a sentiment of what's happening, just look at what happened on Thursday. So Wednesday low in futures was somewhere around 17,238. And on Thursday afternoon, we just went to 17,239. And the selling brought us down 200 points straight away. So that shows that we are in a strong bear rate. And as you rightly said, when I talk about spot, somewhere around 17,200, 225 zone is going to be a very, very tough resistance to break through. And on the downside, if you look at the support, so 16,840, 880 zone is a major support. So if we break that, then I think I see a 200 point more downfall, taking us down somewhere around 16,650 in spot. So overall, the market looks like a sell-on rally.
All right, and talk about Bank Nifty index. Do you think that remains in a sell-on rise mode till the time it does not surpass that level of 40,000?
Definitely, yes. And I would give another 100 points above that. So till we don't cross 40,100, it's a strong sell-on rally. And on the downside, 39,200 happens to be a major support. If we break that, I think we'll visit the swing low, which was somewhere around 38,600, 38,700. So Bank Nifty for me looks more weaker than Nifty. And any rally to 40,000 might be sold. Now 40,000 looks a little far, but even 39,800 might act as a strong resistance.
All right, Prashant, 60 seconds on this. Three profitable strategies that you think our traders can lap up from this conversation right now.
So I think, as I said, my strategy has been sell on rally, but at the same time, there are a few mid and small caps which I feel we can start.
I was referring to the stocks and not strategies per se. So three profitable stock ideas at this point of time.
Yeah. So as I said that although the major frontliners would be sell on rally, the index stocks, I also see an opportunity in the mid and small caps where you can kind of start accumulating the small picks. But this definitely is not a time to go all out, which means if you want to deploy $100 in a stock, you can start with 10 rupees at this point of time. So 10% of it. So according to me, one stock which is looking very good is RVNL at somewhere around 64 rupees. And you can buy it, and my stop loss would be 59 on a closing basis. So if we close below 59, we need to exit, and my target would be 75. This looks decent. And on the weaker side, I see Muthoot Finance has hit a resistance. So it would be good to go short with a stop loss around 122.5. It is a spot level and looking at targets around 108 to 105. And one more stock which is almost at a very major support is SBI. So if SBI happens to break 500, I think one can short with a 508 stop loss. That would be a 8-point stop loss. And the targets I'm looking at on SBI are somewhere in the region of 485. So more on shorting side in the banks and financials, and you can start accumulating a few good mid and small caps.
Sure. Let's quickly address the top movers of the day. We have a bunch of stocks. Of course, all of them are interesting ones, including the Crompton, Greaves and the Butterfly merger out there. TTK Healthcare, Bharat Electronics, Muthoot Finance and Phoenix Mills, amongst, along with the pharma names per se. But let's address Crompton Greaves first. Crompton Greaves, Consumer Electricals and Butterfly, they've announced in the merger. And according to the merger agreement that now works out as Butterfly shareholders will receive around 22 equity shares of Crompton for every 5 equity shares that's held by them in Butterfly. Another one that's a bulk deal, TTK Healthcare. Now, the ace investor Sunil Singhania-owned AMC has checked in. Abakkus Asset Management, they've bought in around 1.3 lakh equity shares at an average price of around 911, which is at a significant discount to the current market price, right? Apart from that, the Diversified Alpha Fund also within the same group, they've also purchased in 1.15 lakh shares at an average price of around 910. On the selling side, you have MCAP India Fund, which has been selling, and they've offloaded around 2.45 lakh equity shares. HAL remains to be in the F&O stock ban, and Bharat Electronics. Do keep an eye out on this one. There's a major win coming in for this player. Defense Ministry has signed in 3,000 odd crore contract. The pact is to supply integrated electronics, warfare systems to the Indian Army, and the company has also received several other contracts adding to the 1,300 crore in the last fortnight from the Indian Navy. Do keep an eye also on the Phoenix Mills right now. There is an initiation report coming in from Morgan Stanley. It is overweight with the target price of around 1,700 per share. Says that it has a portfolio of well-located mixed-use destination malls. It also expects the company to benefit from Indian consumption growth story, and it says that the company is presently in expansion phase and aims to more than double its rental portfolio over next 3 to 4 years. It's not the first time that we're talking about an initiation report coming in for Phoenix Mills. In fact, the real estate basket overall, if you see, that's been an underperformer since the start of the year. But after the past few trading sessions, we've seen some amount of traction building in for this entire segment per se. In terms of Muthoot Finance, that's the one which, Nuvama Research has come out and says that there could be a probable exclusion for, Muthoot Finance from the MSCI Standard Index in May 2023 review if the stock continues to trade below 930. There is a compelling report coming in on RIL by Kotak Institutes, and also there is an upgrade report coming in for Kotak Bank overall from CLSA. So do keep an eye out on these two names as well, apart from the bunch of stocks that we've discussed. Let's be at the sidelines and see if we're looking at a positive start coming in for the markets, like the global cues at least indicated, just to get the flavor of the markets, because we saw saw that STT weighing on the sentiment quite heavily, at least when it comes to the Friday session. So Nifty 50 index is something that we are looking at right now, and slender gains coming in on that one. 0.1% gains coming in on that one. Remains to be seen if we can, quickly cross over that 17,000 mark in the session today. But 16,950 is clearly taken over. In terms of the Bank Nifty index, that's another one that we're keeping a close eye on. At this point of time, it at least indicates a flattish start with the negative bias. 40,000 mark still isn't captured. We are 600 or 550 points rather away from that one. Until that, the strategy per se is sell on every rise that you're seeing for Bank Nifty. That's what majority of the technical analysts are suggesting, right? Private banks, we're seeing slender gains coming in on that one. 0.1% of a gains coming in on the private. PSU banks, however, they've given up to selling pressure early in day, but then at this point of time, the losses are capped to an extent of 0.50% or a half of a percent. In terms of Nifty Metal Index, that's shining up for you in today's trade. 0.5% gains on there, on that one. And if you talk about the Nifty IT Index, that also seems to be doing well. So Metal Index is doing well. IT has been doing well. And if you talk about the Nifty Auto Index, that's also, it's down and out with losses of around 0.60%. But do remember the fact there have been substantial re-rating candidates within that segment, the basket per se, in terms of the auto index. Also look at the pharma index. So, defensive pack, like we indicated right at the opening, we are expecting defense and defensive names. These are expected to shine. Pharma, we're seeing gains of around 0.3%. If you talk about the market breadth at this point of time, 39 advances against 11 declines. So clearly the market breadth is in favor of advances. If you could look at the Nifty top gainers and top losers, just to get an idea of where the momentum is building up. Of course, Bank Nifty at this point of time isn't really participating, but let's look at Nifty top gainers and top losers just to get a broad flavor of how the markets have been doing. Power Grid, Apollo Hospital and Hindalco. Now, metal has been doing well. So, ONGC, Bajaj Finance and Britannia, these are some of the top gainers that we have on our list early this morning. In terms of the top losers that we have for the day, something in the likes of M&M. Of course, these are all dominated by auto now. M&M, Eicher Motors, Titan, they're down and out. And apart from that, you have something in the likes of Bajaj Auto, ITC and Tata Motors. Prashant, I'm just going to quickly come back to you with just one question that we have. Your assessment on RIL, because Kotak Institutional Equity says that it's a compelling buy at this point of time. So the levels on that one. And also there is an upgrade coming in on Kotak Bank. Could you give us the levels for these two?
Yeah, so definitely, Nickey, let's talk about Reliance first, because I think that's going to decide the next move of Nifty. So we are currently just hovering above 2,200, which happens to be a major level. But if you talk about a positional make or break level in terms of spot, so I think 2180, that is 2,180, happens to be a make or break level on closing basis. If we close below that, so that can be your stop loss if you're going positional. And if you break that level, I think we can nosedive around 100 points and see around 2080, 2050 levels. So if you have any positions in Reliance, 2180 on spot basis happens to be your stop loss.
All right. So Kotak Bank and RIL, apart from that, how are you looking at auto stocks? Because they are down and out in trade today. Something like a Bajaj Auto, immediate levels for that one as well.
Yeah, so I think one stock that really looked weak in the segment is TVS Motors. And if you look at Bajaj Auto, so for the past few days, I think it gave a good rally in a weak market. For now, it has hit a resistance, and we are nearing, if I talk about normal technical, so we are nearing the 20-day moving average. And that, according to me, would be the support for this stock, which would be around 3,780. So if you have any long positions, use that as a stop loss. That is 3,780, about 1% away from now. And I think I would not go for fresh longs at this level. I'll wait for the market to settle down, because auto sector as such looks extremely weak. And I would not go against the sector and buy anything.
All right, so not going against the sector and buy anything at this point of time, but these are clearly the levels when you talk about the auto names per se, but something like a metal pack for that matter. Hindalco, what are the levels that you're looking at?
So Hindalco has a make or break level at 400. And I think as long as we are below 400, it happens to be weak. Only and only if we close above the crucial level of 400, I think I would look at buying this stock. And if I buy it above 400, my stop loss would be somewhere near to 392, 393, and I would not keep a deep stop loss, and I would hold for levels around 415, 420. But only above 400 till then I would not buy it.
All right, so that's clearly the view coming in even on Hindalco. But apart from that, Prashant, I would like to know, how are you looking at Bank Nifty index right now, and what's the strategy that you think the traders can now embark upon after the opening that we've seen thus far?
So I think Nickey, Bank Nifty has a high chance of breaking Friday's low, and if we're talking in terms of March futures, it may visit somewhere around 39,300, 39,280. So from that perspective, I would avoid longs, and only if I see that a 39,200 level is holding, I may plan a long. But according to me, it's a strong sell for now. And if the crucial level of 39,200 breaks, then we might go down by around 500-600 points. And as I said right at the start, we might visit somewhere around 38,600 to 38,500 levels as well.
All right, so that's the word coming in on that one. But apart from that, any interesting bets, Prashant, that we're looking at?
So I think the initial ones which I suggested, as you see now, Nifty is also looking weak, and SBI has started looking weak, which was on my sell radar. So I think an RVNL is my buy list. So I think I'll stick to the same list. I would not go aggressive in the week. First thing, it's a truncated expiry. So better to be cautious and at least preserve the capital, so that when we get a better opportunity, a better week, we can participate aggressively.
All right, we'll leave it at that in that case. Thank you so much for taking out the time and speaking to us. All right, let's look at the performance of how the stocks and news have stacked up, especially something in the like of Butterfly. Just to see if that is kind of doing well after the merger announcement that has come through. And of course, something like a Kotak Bank, if you can look at that charts and how they're holding up, just to get, because this is upgrade coming in per se on the Kotak Bank and RIL also for that matter. These are some of the stocks that we're looking at this morning. Kotak Mahindra Bank, of course, some momentum building in there. 0.2% clearly on that one. And also if you look at RIL, just to see how the trend has been stacking up, that remains to be seen, right? So some support. At this point of time, it's a flattish opening coming in for Reliance per se. In bunch of stocks, something like a Sun Pharma also, all these defense names are expected to be in focus in today's trade. But it's that part of the show where we address the fundamental story. And to address that, we have Vikas Khemani, the founder of Carnelian Asset Advisors. Good morning there.
Good morning.
All right, I'm first going to ask you your view overall on the AMC after the recent drubbing that we've seen through and the debt funds concerns that have come through. And apart from that, I will also want to understand your overall assessment on the taxation, which per se has come on the option trading.
So I think AMC is definitely clearly, this has been a little bit of a setback. But if you see the profitability of AMCs, they are largely almost 70 to 80% of the profitability of the most of the AMC is driven by the equity-oriented mutual schemes. So of course, not to say that debt is not important, but to that extent, whatever rules have impact on them. But I am assuming the current assets should hold steady because of only tax advantage. Most people will not redeem them very often now, and probably that could turn onto a long-term asset base. But new assets can be kind of challenging. Of course, from a retail perspective, still it is an important option, but FD becomes equally at par. So to that extent, it is a setback as far as fixed income is concerned. So let's see. These things can change, but as of now, it looks like that. But I guess equity continues to remain a robust growth profile if you look at a slightly longer term view.
All right, and also what do you make out of the taxation part which has come through on the entire option trading, the STT part? Do you think that will to an extent discourage the traders or the investors out there to kind of go ahead and get into that segment? Or you think it's more like a sin tax on cigarettes or alcohol for that matter? No matter how much you add to it, people will still be doing what they're supposed to be doing.
So I think, yes, of course, you don't want additional transaction cost should be as low as possible. But I would assume that, we have seen when STT came, people reacted, then it increased, it got reacted, then the tax advantage or tax credit of STT was taken away, still people reacted. But I personally feel that, of course, I am in general not for STT because you can't have two twin tax. You have business income or capital gain as the case may be, and the transaction tax. There's no reason for it to be there, especially in the asset class. So I think that should not be there, but I'm assuming that it will get absorbed. I don't think there will be major structural change from market's perspective. Of course, short term there might be a little bit of major reactions, but I don't think there's a major change on that.
Oh, okay. And okay, so that's pretty much the word coming in on that one. Looks at the near-term pain, but overall expects the market to kind of absorb that kind of tax. Let's talk about the defense sector. Overall, we're seeing quite some traction building in. We're seeing Bharat Electronics specifically, which is in focus on account of the huge order win that has come through. HAL today is in F&O stocks ban. But how do you look at the overall defense segment, not just in terms of the the overall order book, but also their top line performance and the valuation picture?
So, of course, defense is definitely a long-term, very big opportunity, especially it has just begun. But the challenge with defense as a investment opportunity is that a lot of it is way more factored in the price, and I think most defense stocks are overvalued, and to that extent, one has to be very cautious. In defense, it doesn't work like that. There will always be ups and downs. Markets don't really. I mean, companies don't perform in a linear fashion. There will be periods when they will disappoint. So when those things come, you will see those companies where there's a high expectation and over ownership, they tend to come down sharply. So, I would always put word of caution on the valuation side for the most defense stocks. Yeah, but otherwise, long-term opportunity seems to be in place.
So word coming in overall on the IT space right now. How do you look at that space in terms of the valuation profile, the banking, select banking crisis that we've seen across the globe, given the exposure to these markets, the rejig which has happened for some of the frontline stocks? How do you look at the basket overall in terms of the valuations and the earning potential?
So we like IT because I think valuations have come down sharply in the last 12 months. Sector continues to do well. Order wins are very good. We are seeing no much slowdown in despite US recession or being talked about. So far, I think order book is very strong, and in fact, most companies have guided to their growth, including Accenture last week. So I think probably given the valuation where they are, risk reward is definitely in the favor. And as and when US economy settles down, some pointers come towards interest rates cut down. I think IT could be one of the big winner from that perspective.
All right, Vikas, also let's chat about the overall new age companies before we wrap up this segment. In terms of, Nykaa came out with a report and suggested that there has been voluntary and involuntary exits, which are expected to be, expected in the company to an extent of around 3,000 on-roll employees are expected to, have an exit out there. They see some mid-level, exit as a part of standard annual appraisal and transition process. Overall, how do you look at companies like Nykaa and, for that matter, Paytm? How do you look at that? Do you find some steam to this one, or you think they're past behind the painful period? There's some sense of clarity thus far?
I don't think one can look at new age companies in the same light. Every company has its own business model. Every company has a different management, and of course, what we saw a period of extreme euphoria and excessive getting built in so-called new age companies, which got clubbed together. I think a large part of that got corrected, and some probably still might is still left. So I think only in fullness of time we will know as the excesses get corrected. I still think there's a scope for that. And each company has its own sort of business model. Just because it is corrected from top 60%, 70% doesn't mean that it is value. Still, one has to see whether companies can grow profitably, companies can sustainably deliver numbers. So they were valued as a concept. Those times are over. Now I think it will be visibility of the cash flow, visibility of the growth that will drive the valuation. And I feel in whenever such kind of corrections happen, euphoria gets over, you will see a churn, and that churn will happen in this so-called new age companies, where many companies won't be around in next 4 or 5 years, and some companies will come out well.
All right, Vikas, we'll leave it at that. Thank you so much for taking out the time and speaking to us.
Pleasure. Thank you.
All right, with this, it's a wrap on this edition of the show, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.